Good evening and welcome to the Money Show, your weekly guide to mastering personal finance and building a more secure tomorrow. I'm your host, Kavita Thavial. Finances can feel complex, managing debt, planning for retirement, understanding markets, even founding wealth, building habits. But here on the Money Show, we simplify it all from debt management and savings to savvy investing, risk planning, behavioral insights. We leave no topic untouched, whether you're curious about creating an emergency fund, navigating rising inflation, or investing in mutual funds via SIPs. We bring voices you can trust, real experts, real stories, and real solutions. So every episode, we demystify one financial challenge and equip you with practical steps to take charge of your money future. On today's show, we'll be talking about doing the part payment, whatever kind of loan you have on you, whether it's a home loan, auto loan, we're talking about personal loans. What are the benefits of doing part payment, of making part payment, and its impact on your credit score? So that's going to be the topic in focus today. And we will also answer your portfolio queries. Just in case you're watching the show live and want to send across your questions, you can WhatsApp us your queries on 865-797-4571. And you can also email us your questions on the moneyshow@etnow.tv. All right, so let's begin. And most of us think of loan repayment as a fixed, rigid journey. Pay your EMIs on time and wait for the tenure to end. But what if? What if we told you there's a smarter way to reduce your debt burden and improve your credit profile? Today, we are decoding a powerful but often overlooked financial strategy, making part payments on your loans. Whether it's a home loan, personal loan, or even an auto loan, making a partial prepayment can reduce your outstanding principal, cut down your interest burden, and even shorten the overall tenure of your loan. But what's equally important is how this move reflects on your credit score. Will a part payment give your credit score a healthy push? Does the type of loan you prepay really matter? How much should you part pay to make a meaningful difference? And are there any downsides or charges you should watch out for? And is it better to reduce the EMI or the tenure after making a part payment? Now, to help you navigate all of this, we'll break down how part payments work, what the RBI and credit bureaus look for, and how lenders interpret your financial behavior. So if you've got a loan or are planning to take one, don't miss this deep dive into how a small financial decision today can build a stronger credit profile tomorrow. Aparna Ramchandra, founder, director, rectifycredit.com, is with me on the show and will be answering all of these questions. Aparna, first of all, part prepayment, if I can call it that, how good a strategy?
It is a good strategy, Kavita, especially, if we are looking at a large ticket loan, part payment, any kind of prepayment is always a good idea because overall you will be able to close that loan earlier. So it is a good thing. Like it tells two things. The lender knows that you are going to be you are a responsible borrower, so you have every intention to close this loan, pay it in full, and move forward. That is number one. Number two, your ability to take new loans increases. Number three, overall in your own cash flow, things will improve because what you've been allocating for your EMIs, you can maybe further use it for investments or, buying some other assets. So overall, part payment, prepayment, early closure is a good strategy as far as the large ticket home loan is concerned. But when we look at, but this discussion is primarily relevant and important, I am assuming for your viewers, is more in terms of people who've taken personal loans or who've converted their credit card outstandings to personal loans. So there is an EMI going on. In this scenario, it is very important to understand where in the cycle are you. If it is there are just last 3 or 4 EMIs left and you go and pre-close this personal loan, then the burden is not as much. But in the earlier period, if you go and offer a part payment or thing, then there is when you do a pre-closure, then there is a penalty on the remaining amount. But in most of the cases, when it comes to personal loan or credit cards, these partial loans, not every lender encourages. Kavita.
All right. Now let's take it depending on the kind of loan you have. Home loan. This is a much more planned loan that you take on yourself. Okay, you need to figure out your EMI. You need to figure out your other expenses also. Should one consider a part payment for a home loan? I mean, definitely the answer would be yes. But then, how will that be possible, and how much should it be?
See, like I said, it's a out and out a good thing to go do part
Right.
payments. And
Right.
RBI has permitted as many part payments, out of the way EMIs to be paid in a home loan during the year. There is no penalty, so which is a good thing. So there is no outer limit as to how much you can pay, depending on what you can set aside. You can use to go and repay your home loan. Now, what happens is, especially like something like COVID, right? So, suppose you had a 25-year home loan, but you had done quite a bit of prepayments and brought down your overall outstanding, and there was just a small amount of that loan remaining. Now, if something like a COVID were to happen, then you could go back and take a top up on that loan because most of it was repaid. So, from that perspective, also, when things are good, when you are able to set aside an X amount in excess of what is your regular expense, then it is always a good idea to go and do these part payments as far as your home loan is concerned. And for the lender, this is a only showing your ability to be a responsible borrower. It will not impact your overall credit score or credit profile because part payment is not reflected in your credit report. But to the lender, you are showing that you are a responsible borrower. Kavita.
All right. So part payment for a home loan is a thumbs up. Okay. Now let's talk about the unsecured loans. Over here, in case you're doing a part payment, there is a penalty. Is that right?
Yes,
Okay.
most of the lenders do not encourage or permit these part payments within the tenure of a personal loan. So you either go and completely close that personal loan and pay the whole thing in full with your penalty and GST on top of that and be done, or you continue to pay the EMIs till the tenure lasts. So it is it is almost not possible to go do part payments in a personal loan. Kavita.
All right. So okay. So talking about that, what is the penalty? Will it be really high? Can even just pay the penalty also and make the part payment? Is that advisable, or you think that will be too much of a financial burden? What is usually the range of this penalty, or it depends upon the part payment that you're trying to make?
No, it is usually between 2 to 5% on the outstanding amount
Oh,
plus GST on that. No, so
okay.
no, what I'm trying to tell you is part payment is difficult. You can go and do a complete repayment and close the loan. Suppose you have a 5-year personal loan and in the year 3 you figure out that you want to close this loan, you can go close that loan. So last whatever 2 years amount is remaining on that, you pay that 2% penalty with GST and close the loan. In a personal loan, going and doing a partial payment is not encouraged by most of the lenders.
All right. Uh, so what you explained for the home loan also goes for the auto loan?
Yes, no, what I explained for the personal loan goes for the auto loan.
Oh, okay, okay.
Yeah.
So
So it
this
is
is a tricky
only the home
situation.
loan. Yeah.
Yeah,
So it is
yeah,
only the home loan which RBI came in and said that should not be any penalty, and
sure.
partial payments, part payments, pre-closure, all of that should be allowed. And on the same loan, on the same property, you can go do a top up. All of that is possible in a home loan. But these other things are possible, whether it is an auto loan, whether it is a personal loan, or whether it is a gold loan. Kavita.
All right. Now let's talk about the credit score aspect of this particular thing. You are making a prepayment, you are making a part payment. Definitely reflects well, but then does it really impacts or gives you better score?
No, it has absolutely no impact on the credit score. It has no impact on your credit profile because basically, see, please understand the credit score is calculated based on your, how you are paying on a regular basis. So the banks don't go report that, this XYZ has done a part payment, or he has done a, early closure. All of that is not reported. So it has no impact on your credit score or your credit profile. But to the lender, you are a responsible borrower when you go do these early payments. Kavita.
All right. Now, since we are talking about the unsecured aspect of the loans or the type of unsecured loans, if you make a repayment before the entire tenure of the loan, does it reflect well, or that again is not concerned?
It has no direct impact on your credit score or
Okay,
credit profile.
even that doesn't have any impact.
That doesn't
Got it.
happen. But the only thing is, you as a borrower, your cash flow, you become positive earlier than expected. And you also become eligible for newer loans because you've paid this and gotten done with it. And while we are discussing all this, I would also like to pinpoint, whenever you do a part payment, or you do an early repayment, or you reduce the EMI, or you increase the tenure, all these permutation combination, whether it is a home loan, whether it is a personal loan, it is very important that the new loan story is reported in writing to you. You should get a letter from your lender that this is what has happened. Otherwise, you doing these payments, partial payments, if it is not recorded, then tomorrow you will get into a soup. So every time you do these early payments or excess payments, make sure that you get a receipt from your lender, and the new EMI or the new tenure is sent to you, shared with you in writing. So that is very, very important, because tomorrow when you close the loan for whatever XYZ reason, if there is a data mismatch, you have this document with you. So that is equally important when you are looking at these, over out of turn payments, if I can call them. Kavita.
All right. All right. One more question to you, and then we'll wrap up this discussion. Now, I really want our viewers to understand the way a score is. I mean, I've asked you this question a zillion times, I know, but then every time we have a new viewer joining us who might need that answer from you. So, one that, and other question is a credit card repayment. That is a win-win, right? That's definitely a good thing if you want to close it before the deadline or before your tenure or the monthly cycle comes.
See, please understand, if in a
Yeah.
credit card you are paying on time, okay? So if
Right,
your due
right.
date was the 25th, and you pay the whole amount on the 25th, then you are excellent. There's absolutely nothing. You're a good credit card user. Now, where the issue comes is where, what we are discussing is, when there is an amount that is not, the person is not able to pay in on that particular due date, then what happens is, sometimes these credit card companies allow you to convert that outstanding into an EMI. So a 6 month or a 9 month or a 12-month EMI, where this is equally divided, and you pay this amount and repay this 1 month ka total outstanding. In this scenario, you can't, if you've agreed for a 6-month EMI for this credit card due, you can't go back on the third month and say, I want to do a part payment, or I want to do a prepayment. So that is not allowed. So I think I have answered your question. If not, ask me again subsequently. Now, coming back to your second question, what is included in a credit score, or how does it get calculated? Each bureau has its own secret sauce. It is like the Coke's formula. Nobody knows. But overall, what is important is, how do you repay? Do you repay on time, or there are some days of delays in your repayment, or on in a quarter there is an issue and then subsequently all has gone well? So one is your repayment. Second is, how much have you borrowed? Third is, what kind of loans you taken. If your credit report, which I am seeing these days, there is a 30-page credit report which is only full of personal loans and credit cards. There is no secured loan at all. Now that, though the score may be excellent, everything is good, but overall that credit profile is a huge So it is also important to know what kind of loans you've taken. Last but not the least, you should also know from where you've been taking the loans. If there are only, NBFCs, more expensive loans, then you know something is amiss. So all of this together adds up to your credit profile. It may not be your credit score, but it's your credit profile. So tomorrow, when this story is shared to a new lender, he is seeing this story. And that is credit profile. Kavita.
All right, I think that will be all. Thank you so much for being a part of this show and helping our viewers understand every aspect of doing a part payment on their loans. Thank you so much.
Thank you.